Alright guys, sorry for the late start. My dog had to go to the vet. My staff brought her back and leashed her up where she couldn't pee. And then she came in the room and then she peed. It's hard to find good help. So I had to clean it up before we started this. Staff's already gone home for the day. Give me just a second here. And I broke my favorite glass today. Had it next to the bedpost, got up out of bed and whack! Hit the tile floor and shattered. But hopefully stocks are going to treat me better than the rest of it. Had a nice beautiful day at the beach today. Let me get this on. Oh, I got to take this off. Boom, there we go. And whoop, there we go. Hey guys, how you doing? I just got back from the beach, eating dinner and watching the moon eclipse. That was kind of nice. A bit slower than I would have liked. Anyway, this is the Fox Swiss Stocks channel where we do live trading. Rashida says we should take an individual on each video through a wheel trade to understand their logic for selection of the stock, what premium, DTE to pick, just the thought. Well, normally we listen to your logic for trades, so we are getting to understand how you think, but it could be good to walk through a trade idea for one of the members, so somebody else. No, I think it's a good suggestion. I definitely think we should go to at least some sort of interview style. And I'd like to find other good wheel traders. There's a lot of people on YouTube that talk about trading stocks, but not a lot of people besides Tastyworks, Tasty Trade, that talk about the wheel. Actually, even they don't talk about the wheel. They talk about, all forms of option trading, but they do focus a lot on the selling. All right, let's see. Just a second here. Close out some of these so I don't got too much stuff going on in the background. All right, let's get going. So today's hot topic is hand grenades. We'll get into that in a second. Just want to tell you, just before I forget, part of the reason I do this channel is to promote life extension and cryonics. Life extension is getting older without aging, without having the disabilities or the diseases of getting older. And if we cure those, and there are companies and this nonprofit foundation working on curing that, then theoretically we can live forever until an asteroid hits us. The other thing is cryonics. If you guys are in the U.S., actually, even if you're not from the U.S. and Russia both have a cryonics facility where if you pass away, they will transplant your brain to a frozen nitrogen tank with the hopes of de-thawing you 100 years in the future. A bit sci-fi, but hey, if it works, it'll be the best investment you ever made. Also, check out theoptionsoracle.com. Fantastic place to do the wheel trades. They give you wheel trades in a monthly newsletter. They've been doing it since 2009. I think that's even before it was called the wheel trade. Does anybody know when we started using the term the wheel? Back then it was just selling cash secured puts and selling covered calls. It wasn't, I don't know if there was a strategy for it back then. I could be wrong. Okay, I've only been wheeling for about a year. I've known about it since 2012. So check out GME and AMC. But when I was introduced to it, it was called the rowboat. And then somebody called it something else, and then somebody called it the wheel. But that's what the Options Oracle since 2009 has been calling it, the rowboat. It's basically the same strategy. AMC is up in the pre-market and up yesterday, $2.73, and then up $1.49 this morning. A lot of people are talking about wheeling on that because it's got the premium going up. But I want to show you guys something, and this is what we mean by, this is what I mean. What am I doing? Wall mine. There we go. Trading on hand grenades. You can make more premium, you make more profit. But I'm going to give you my opinion today on AMC, not the crypto. Oh my gosh, I hate that this site prioritizes crypto first. I don't think anybody in crypto goes here. All right, so people are getting pumped up about AMC, the vaccine. People are going to go back to theaters. Yeah, that's going to be great, great, great. Revenue is already down quarter over quarter, 84, 91% per year. They're losing 700, 900, almost $1 billion per quarter. They only have 842 million in cash left, and out of their total assets, they have 10,488 million. They'll probably survive. But their debt is $12.7 billion. $12.7 billion versus $10.4 billion. So you should not be shocked when they issue shares and dilute the crap out of their shareholder value. I mean, because what else are they going to do? Who's going to loan? What bank is going to loan to them when they're already basically at 115% debt ratio leverage? Let's do the math. 775 divided by 10,488. Yeah, it's 121%. They're leveraged 121%. So what's going to happen, in my opinion, is you've got the Wall Street bets and people are excited about the vaccines and people are going back to the movies, and so this price is going to go up and down, up and down, up and down. But I trade the wheel for safety. I trade the wheel because it's a safe strategy, not because it's a high earner strategy. I mean, it's high earning compared to off-the-shelf investments. That's what I mean by, let me bring it up here, bigger, safer stock, actually is what I mean. Safer than strictly buying it. If you just went out and bought it today, for example, if you bought AMC today, you'd buy it at $17.75, and if it goes down, you instantly lose money. Instantly. You have a one-to-one relationship with that stock. You have a one-to-one ratio with that stock. Whereas if you sell the put, okay, if you sell the put, let's say the $15 strike, then you're already $2.75 safer than buying the stock. And then, of course, I say profits, because that's what we're in this for. Bigger, safer profits. So, I mean, it's bigger than off-the-shelf investing, mutual funds, etc., and it's safer than buy and hold, safer than a buy and hold strategy, which is probably one of the safest strategies you can do. The two safest strategies that I've found so far is the wheel and long-short positions. Long-short meaning you choose a company, say, for example, Tesla, and you go long on Tesla, and then you short the worst company in that sector or even in a different sector. But especially in the same sector, because that isolates your risk. You get rid of sector risk, you get rid of market risk, and then you isolate to company and then currency risk. If you want to fix currency risk, then you also have to open up a Forex trade against the currencies if the companies are in a different currency. If they're in, like, one company's in England, one company's in the US, then you also have to balance out the currency risk, but then you're pretty much isolated to company risk, and so you can just choose good company, bad company. So you might choose Nissa. If you were perfect, you would have chose Tesla and Nikola. I wish I would have done that. That would have been amazing. And this way, if Nikola goes down, let's say they both go down, right? Nikola and Tesla go down at the same time, then they balance out because you're long one and short one. If they both go up, then you lose money on the Nikola, but you make money on the Tesla, so that balances out as well. And in the ideal scenario, because you're just looking at company versus company, so that's why it's like it doesn't matter which way the market or the sector goes, it's a wash. You've got no risk to the upside and no risk to the downside. Now, if you have just Nikola and Tesla as your long short, if Nikola goes down, then you make money, and if Tesla goes up, you make money, and if they both go both ways, then you make a lot of money. Which is why you want to do something like Tesla versus Nikola, not Tesla versus NIO, because Tesla and NIO are both going to make money, not a very good long short. So that's those two strategies, the wheel and long short, are the two safest strategies that I've found so far to make money. Now, if you want to trade AMC, no, I'm not going to stop you for sure, but just know that you're dealing with a hand grenade. You're dealing with a hand grenade. What I mean is, like, it's one of those stocks where you're just passing it around, hoping that somebody's going to buy it higher. There's no good fundamentals. There's no good cash balance. There's no good balance. There's no good revenue. There's literally, nothing good except for the hope that it's going to reopen the cinemas and come back and all this other good stuff. And the hope that somebody else is going to buy your stock. Okay? You can make a lot of money doing this, but I wouldn't use the wheel on it. If I'm going to do this, then I would buy calls, or I would go long, or I do margin long, or I do something. I wouldn't do the wheel. I wouldn't sell cash secured puts on any hand grenades such as AMC and GME. So we just looked at AMC. Let's look at GME, and then let's see if we can also find short interest GME. short volume. See if we can come up with anything. Short volume ratio 24%. I'm not sure what, so that's volume compared to the market volume. It doesn't tell me the total short interest compared to stocks outstanding. This is again volume, short volume versus volume. 6% more. Dollar volume sold short 2 billion. Outstanding shares float is 56. Short percentage of the float. So here we go. So market beat, that's where you can get the short interest. So there's a lot of people that want to follow the Wall Street Bets strategy of going out and finding these companies, and then right now, Wall Street Bets used to be a place for crazy strategies to make a bunch of money, super risky stuff, and now it's become just an echo chamber for GME, AMC, GME, AMC, GME, AMC, and almost nothing else makes it to the front page anymore or stays there. So here's the problem. When GME started, when the whole Wall Street Bets GME play was starting, there was 140, I think it was 120, it was 120 or 140, 140% shortage of float, meaning there were more shares shorted than there were available on the market because you have multiple brokers shorting and shorting and shorting, borrowing and borrowing and borrowing and shorting and shorting. And so it had ballooned up to the point where it was 140% short, which when people see that will actually cause the stock to tank because there's so much short interest that people expect that everyone knows that it's going to go down. And so what somebody recommended on, I forget his name, but one guy recommended on Wall Street Bets was that if we all go buy this up, then there's too much to short. Therefore, the only thing that can happen is that they could have to try and liquidate at any price. At any price, they would have to liquidate. And as long as they kept shorting and holding, then the price would be forced to float higher because they're borrowing those shares, they're paying interest on it monthly, and if it goes higher, then they eventually get margin called, and that's what causes a short squeeze. A short squeeze is actually a margin call as the stock price goes up. The GME scenario, the idea of buying GME and short and forcing a short squeeze anymore is BS. It doesn't work anymore. Okay, when Citadel, when Citadel forced Robinhood and all these other brokers to freeze the trading on GME, that enabled all these big hedge funds to sell their shares to get out of it because they could keep trading while the retail trader couldn't trade. And in fact, Robinhood was actually taking shares away from people and then selling it to the it should be illegal. It really should be illegal. There should be an SEC investigation to this, but it's probably not going to happen. Anyway, they're literally raiding people's accounts, taking away their shares, and then helping the hedge funds cover their shorts. But this play doesn't work anymore because there's only 20% short float. There's not 140% short float. So now you're just playing the hand grenade game. You're just buying GME on a false narrative that it's going to go up or that there's a good reason it's going to go up. The short play is gone. There is no short squeeze on it. So I just want to say, hey, if you want to do that stuff, that's fine. Don't try and use the wheel strategy for that. That's silly. Go find some super high risk, high return trade for it. Go buy deep out of the money calls with the intent to just flip them or something. Don't try and take a safe strategy and put it on a dangerous stock and thinking that you're going to get safety, because you're not. You're destroying you're using the wrong strategy to make the wrong play, and you're destroying the value of it. Yeah. Rashid said, I bought the AMC call option. Good, you're buying it, you're not selling it, right? So you're not wheeling it. Because I thought the stock would increase in value with the lockdown easing. With fundamentals, I would not buy AMC. Yeah. So my question is why not go find the same play on a company that also has good fundamentals? There's 9,000 companies in the stock market. Actually, there's over 9,000 with options. There might be closer to 13,000 if you count the stocks without options. Okay? It's 9:03. I was going to run through the wheel strategy today, but I just want to talk about those hand grenades because that seems to be a hot topic today. We've done that, so let's go start looking for some stock picks. But if you're going to do hand grenades, go do deep out of the money calls with a small portfolio somewhere in a place where you can't get called away or taken advantage of. Anyway, this scan did not finish, did not go through. All right, let's go check out my scanner. Afria, which is also Tilray, since they should be merging as long as that doesn't get stopped. You get 8% in 23 days. I'll tell you what, cannabis has not been a winning sector for me lately. I'm still bullish on it long term, but it has not played out my cannabis plays. Big 5 Sporting, that's showing up again, 3.4% in 23 days. They also pay a dividend. Kirkland's Home Decor and Gifts. This is a Becky stock. By the way, if you're in the chat, if you're watching today, make sure you hit that like, subscribe button. But also let me know you're in the live chat, where you're from, how old you are. That's the question for today. How old are you? I want to know the age range of my people watching. And if you have any questions, if you're new to the wheel, if any of this is confusing, just let me know. And I'll be happy to answer any of your questions today, as long as they're related to the wheel and trading. If you ask me what the meaning of life is, I don't know. I'm still working that out. AMC, if you wanted to wheel it, please don't do that. You can get 14% in 23 days. Okay, fair point to the people I see, quote unquote, wheeling it. They're not really wheeling it, they're scalping it. They're scalping the CSP. They're opening up a covered short position. Sorry, cash secured put. A cash secured put. And with the intent of just closing it out earlier in a couple days. They're only holding it for a couple days. That is not wheeling, that is scalping. Okay. Riot, you can get 11% in 23 days. Okay, let's see what Bitcoin is doing. Singapore, age 50 plus. I like the plus there, that's great. Yes, I am the luckiest guy. Nice to meet you. Yes, I am. I think it's the first time I've seen you on the channel. I want to welcome you, and if you've been a lurker, I want to welcome you back. Bitcoin is up 7% on the day, 21-ish% on the week, is almost reached 40,000. 40,000 is a nice big round number. If it goes through that, I think a better way of saying it, if it goes through 41, we could see this rocket start to take off again. If it goes through 40, I think a lot of people will look at that as a chance to sell, and then we'll see if it comes back down. So I know a lot of people are waiting for it to test 40, and I think they're going to get bull trapped. Is that a bull trap? I think they're going to get trapped on that one. We're going to see it hit 40,500 or 400, and then people are going to start to sell, and then it's going to go back under. I think, but I could be wrong. Yes, I am the luckiest guy. Says, how do you select the best stock for the wheeling strategy? So we're actually doing that right now. We're doing a scan, and what we're scanning for is we obviously want to be, this is me, by the way, this is what I do, right? I want to be I want to be actually about 30 to 90 days out. I rarely do 90. I do like 30, 45, and 60. I want it to be small enough that my account size can handle it. So under 200 for sure, under 100 is better. And I want my APR, that's the amount that I'm going to get if I were to repeat that trade every time over and over again, to be above 50%. You can also think about it as your ROI. A lot of people think about their monthly ROI, and I set a minimum goal of 2%. If I'm not going to make 2% in a month on a wheel, then I'm not going to take the risk to do that. So then we go through our scanner, and then I'm looking, actually I like to look at the fundamentals, and I like to look at the long-term projection of the company and the sector. So I'm bullish on Bitcoin. I've been wheeling Riot before. We're seeing a 11.25% return if we wheel Riot. So I'm going to go take a look at that, because that is higher than it was last month. I am talking myself, I need to breathe, talking myself dizzy. By the way, yes I am. You are my neighbor. I'm here in Bali, Indonesia, so it's actually 9:08 p.m. just like it is for you. How late do you stay up trading US stocks? Or are you even trading US stocks? Do you guys have options in Singapore for Singaporean stocks? So now I'm looking at all the different chains that match my criteria on Riot that are within 37 days. So I'm going to look at those first. And now I'm looking at the cost basis distance. So I'm looking at chains that make over 2% in a month and then have the most cost basis distance, also known as break even. I think break even percentage is what bar charts call it. And that's the amount that the stock can fall, the amount the stock can fall before you start losing money. So I want to find the what accent is that? I'm trying to find the best relationship for having the most downside protection but also getting the most ROI. I trade only US stocks. Awesome. Fantastic. Let me know if you're ever in Bali. I will buy you a coconut, we'll watch the sunset, and we'll talk about stocks. I rarely go to Singapore. If I ever have to do a visa renewal, visa run is what we call it, visa renewal, I usually go to KL and not Singapore. Singapore is okay, but I prefer cheaper places. Singapore is not that cheap. All right, so if I'm going to do this, I'd rather make more than 2%. There's an 8 up there. So we're looking at 11.4. That 14 is tempting though, and you're still getting a cost basis distance of 18.6. I might do one of those and one more of another. Actually, okay, so if I go 37 days out, there's a 10%. That's a 102 versus a 145 APR. Where was that 8%er that we saw? 9 with 27% downside. We're definitely doing a riot play today. I was trying not to open up any positions today. I've already got enough open positions, I feel like, but this is too good to pass up, I feel like. Okay, so those are the two I'm looking at. Let's do this one first. We're doing the $20 put July 2nd. Let me bring that over here. I gotta remember to turn that on next time. There we go. I don't mind you guys seeing my account balances. I don't like you seeing my account numbers. Probably shouldn't say that. Boop, 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 do, do, do. We did July. Oh, July 2nd is after earnings. Okay, we want to go before earnings. We're looking at the $20 put. We can get $1.55 at the 20. That'll give us 7% return. We got 14 cents on the spread. I might be able to squeeze out another 3 cents. What will that do for us? Whoops. 1.58 divided by 20. Oh, come on. 1 point. What is going on with my calculator? Okay. 1.58 divided by 20. That's a 7.9, almost 8%. All right, let's put it on that one. So I'm going to try and get 159 at the 20, June 25th. Let me type that in so we have a record of it. Riot, June 25th, $20 put at $1.55, almost 8%. Alrighty then. The other one we were looking at was it the 14? That's right at 24. That still gives 18. That's crazy. It gives 18% downside protection. All right, so if you come down to 24, yeah, that's a $3.10. Probably get $3.15 out of it. 3.15 divided by 14. That's going to give us 13% ROI because we're going to go before the earnings. And then if you look at this, our max loss is 2,085. So if you think about the decimal in there, really saying our max loss is $20.85 per share. So our cost basis would be $20.85. And if we do that by today's trading price, you'll see that we're getting basically 22% downside protection. So even if we own this stock, we're going to own it 22% cheaper than if we buy it today. And every one of those we do, we're going to make $310 per contract. Every time we do it, we're going to tie up $2,000 for 30 days. We're not going to lose $2,000 if we're wrong. We're just going to buy shares. I got 4 people watching. Make sure you hit that like and subscribe. I got 0 likes right now. People on Facebook are making fun of me because I don't get enough likes. That's actually a true story. Yeah, I'm talking about you, Scott, if you're watching. Anyway, I'm making money. I don't care how many likes we get, but it helps the algorithm and it impresses the narrow-minded. They see how many likes a financial channel gets. They think that there's good information. Really, it just means how hypey and exciting they are. All right, Zin, I don't do that one. LiDAR, I don't touch LiDAR. Mara is in the same boat as Riot, but we're getting more on Riot than we are on Mara right now. Pharmaceuticals, I'm not interested in. Space, Virgin Galactic, I've done a bunch of those. I'm going to let those play out, but you could get 7.62% return in 23 days, and you'd have a little bit of distance, only 15. I would probably look for a safer one. I like to see cost basis distance of about 20 or higher percent. Ren engages in provision of social networking service, used car business and software is yeah, they're a weird one. Stitch Fix, I've looked at them. Workhorse, that thing keeps sliding down. I wouldn't touch that one. They were a lot of fun last year, but they didn't get the USPS contract. Nobody likes them anymore. And their balance sheet's starting to look crappy. Apps has been really good with us. We've been able to close apps multiple times early. Do I have any position? I don't have any positions on apps right now. I'm going to take a look at apps. Is apps in my watch list? I don't think it is. That's a song I wrote. Alright, we got to add apps to this. I don't know if Riot is in there. These are mostly stocks that I've been looking at doing, and not the stocks that I have been doing, so I need to fix that. All right, let's go take a look at apps. Earnings come out June 1st. That's why I haven't been doing apps. Apps looks good. But earnings June 1st. Let's wait. I want to get you guys also a Discord invite. We have a Discord chat room, so you guys can stay up to date with me and continue the conversation with your fellow traders. Some of the stuff in there is pretty good from the other traders besides me. Blue Apron. Blue Apron is like the bad version. I forget what it's called, but they deliver raw ingredients to your home in like a recipe, and then you make it. But their feedback or their sentiment analysis is crappy compared to the other players on the market. Tilray, Cannabis, Plug Power competes with Tesla and doesn't really compete with Tesla. It's just going to get squashed by Tesla. Jumia, I had a chance to make a lot of money on that one, but I felt like that could have been a big winner when this was below $10 a share. I really just didn't understand the market in Africa enough to make a trade on it. But that has been doing really good for those who did make trades on it. And I'm not even talking about wheeling. I'm talking about just going long or going long calls on Jumia. That's a nice thing about doing the wheel and scanning is you can find a lot of great up and coming companies before they're famous. But you got to be willing to take the risk of making the trade on it. Anyway, I'm going to give you guys a Discord invite here. go ahead and click on that. You can join the Discord. It's absolutely free. We've got a bunch of members in there. How many members do we got? Well, we've got over 60. We've got over 60 members in our Discord chat room group. So I encourage you guys to join, share information, share trades with each other, share research. Sharing research is like super underutilized. There's too many people talking about what stock they're going to buy and do, but they don't share the research and the why they're actually going to do it. You should always encourage each other to explain the full thought process. Because it doesn't matter if you buy a stock. If it goes down, you don't have the conviction to hold if you don't have the same point of view and analysis as the other person who recommended it to you. Unless you just trust them. Okay, so apps. Yeah, there's some good returns on apps and a lot of cost basis distance. 18%. You go from 61 down to 50. So you end up buying it. You'll buy it at $50 a share. You can get 4, you can get 5. The 5 is better. That's 7 more days. It's not that much better. It all depends how much risk you want to take. Not seeing a lot higher APR unless you go shorter in the date. So I don't see much reason to do that. That's another 37. Ba 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 ba. Yeah, I still feel like this would be the better one. So here's what I'm going to look at. Oh, but we're waiting. I forgot. We're waiting on apps. Sorry, I got distracted. All right, Kirkland showed up. Let's go do a quick analysis on Kirkland. Let me know if you guys have any more questions. Happy to look at any of the stocks that you guys are considering. We're going to do a quick analysis on Kirkland because I've looked at them, but it's been a while. They probably had another earnings come. No, their earnings come out in June 1st. Darn it. All right, no Kirkland. Not going to waste my time if earnings are just around the corner. It's 9:21. We got 9 minutes. Before you forget, make sure you hit that like and subscribe button. And then also, I want to remind you guys, we have a great affiliate with theoptionsoracle.com. They sell a monthly newsletter for $97 a month, but they have a free trial. They have a 30-day free trial, so you'll for sure get at least one newsletter out of them. They recently did 6 picks, and this is what they did last month. They did AI apps, PLT, and pins, and they showed you where they closed them early and what they made on those. I've been using them for a year, and I feel very confident in recommending it to you guys. All right, NVDA is announcing today. Any good plays with that? NVIDIA. That is one of those hot topic stocks, but unlike GME and AMC, I actually like the company. Let's go check them out, NVDA. And you're asking, is there a play? So that, to me, that means you want to know if there's a setup. Earnings are right around the corner. You got 77% open interest on the 2-day. That's not much. And you basically got 40-ish%. So I'll tell you what I would do. Okay? I'm not saying I'm going to do this, but I'm telling you what I would do if it was me. It's a $600 stock, so you actually have to buy some wings on this. But instead of going 30 days out, with the earnings coming around the corner, instead of going 30 days out, you can get more premium up front and create more downside protection if you go further out. So if you go 86 days out, you're still at a good theta decay. Once you get to 90 and 60 days, theta decay is very rapid, and you make a lot of money every day that you hold it. So what I would think about doing is getting some real distance on this. Actually, it's actually starting to look pretty good because you're at 625 now, is basically at the money, and you can still get $20, $30, blah, 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 all the way down here at 555. So if you were to open the 555 for $17.95, you'd be risking a lot. You'd be risking $53,705. That's if the company went bankrupt. Not going to happen probably, but buying power effect is you're also getting a good ratio on margin account. So if you're doing it in a margin account, this is okay. If you're doing this in a cash account, you're going to put up $53,000 to make $2,000. So that's not a very good ratio for a cash account. For a margin account, you're making $2,000 for every $6,000 you put up. But, you know, be careful, because every dollar it goes down, it's like going down $10 in profit or in losses. But what you can do is come back out here, even if you're in a cash account, and you can set up a wing. So you can buy buy for $18 premium and sell for whatever premium you want. And then that gets rid of the value below it in terms of the cash being held up. So let's just, for example, let's come down to $7.95, and so you get a nice $10 flat. Now your max loss is $4,000 and you're making $1,000. It's actually looking pretty good. And you can do this in a cash account or a margin account. If you do this, notice that your buying power in the margin account suddenly matches the max loss. So you're not going to get margin because it's assuming that you're not actually going to get assigned shares. If you get assigned shares at this max loss, you have this other wing to cover it, so it's not giving you margin anymore. So it's up to you whether you want to play margin or if you want to play wings. All right, NVDA. Load up. Not much short percentage on it, so there's not going to be any short squeezes. Short squeeze is a good thing if you're long, by the way. Revenue quarter over quarter, 61 and 52. That is absolutely fantastic. ROCE is 18. That's good. Profit margin 25. That's really good. Wow. Should look at these more. Made over $1.5 billion in December quarterly. Excuse me. 11,898 versus 28,791. That's good debt ratio. That is less than 50%. Let's round it up to 12 and round it up to 29. That is 41% debt ratio. Yeah, this is actually pretty hot. What am I looking for? I'm looking for this. NVDA. NVIDIA. I know they mostly do GPUs. Did they also do just regular, what am I thinking of? Chips. Do they do regular chips? Are they part of the chip shortage solution? 61 and 52. We said it was 41% on the debt ratio. Runway is infinite because they are profitable. But earnings come out 1st of June. We got 6 days before earnings come out. Everything else looks great on this, actually. This is a 5 in rating. It's just such an expensive stock. 625.91. Man, do I want to do this with margin or do I want to do this with wings? Now that's the question I'm asking myself. Hey, thanks for bringing this up, Mr. Yes, I am the luckiest guy. I see NVIDIA get talked about a lot, but I never actually, sadly, went in and did the math and did the research. I typically scan for wheels under $100 a play, so this wasn't part of my normal strategy to look for that. Be deep out of the money at the 555. If it starts to tank, though, it's going to be hard to close early and buy it back. So you'd have to actually hold it to expiration, even if you have that downside protection. But as long as the company is good and solvent, you're probably going to be able to make your money back. So, but that margin makes it dangerous. The margin makes it scary. 2 minutes before the bell. I believe NVIDIA is also up before the bell, so you might want to wait and see what the prices reset happen on the... Actually, if you can get the put in there, you don't need to wait when you're doing a put. You want to wait when it's up and you're doing a call, a covered call. Oh, let's come and see our curve analysis. Yeah. The other way you could set this up is you could balance out your loss and profit, but not really going to get it. If you're super bullish on this, you could start selling and buying calls of wings and make it into a crazy spread, a bull ratio spread. You'd want to be really bullish on it, and with earnings coming out, I don't know if that's what I would want to do. Hey, 9:30. Numbers have changed. Yeah, you see the bid has already dropped $2 on that covered short put. Whoops. All right, did not get any fill. We've seen the price has already dropped $1 on one and 60 cents on the other. This is good educational material because I'll tell you what, we have to reanalyze this. You say, oh, well, it's just $50. Go ahead and just chase it. But if you do that, right, then you're getting 1 on the 20. You're getting 5%, whereas before we were getting 8%. This also means that we're getting 3% less downside protection. So if we had, let's say 20%, now we're only getting 15%. That 3 and 5% difference makes a huge difference. So sorry, it would have been 17% downside protection. So not only will you get smaller premium, you're also going to get smaller downside protection, which is why we have to be very careful chasing the price just to get an order fill. Sometimes you fall in love with the company and you want to do any deal you can on that company after you've done the research, especially if you put in 8 hours worth of research. Then you start to FOMO in and you're like, oh, I just got to make a trade. I've done the research. It's a good company. You see that this price drops 50 cents or 20 cents or 20% or whatever, and you say, oh, I'll just chase it. I'll just adjust down and I'll grab it anyway. But you're not only reducing your premium, you might be okay with that. You're also reducing your cost basis distance or your break-even percentage. So be very, very careful and try to avoid chasing price if you can. All right, let's go look at our positions and see what we have to manage. I got 6 people watching. Only 3 of you hit the like button. It's not that hard. It's right next to the live chat. On your way to the live chat, hit that like button so Scott on Facebook stops making fun of me. Tesla's up. Yay. Thank you. I like that. Every day I see that. Sage continues to be great. I want to make sure that's on my watch list. I need to add my own stocks that I've been doing. I've had this for stocks that I was looking at. I should add all the stocks that I'm actually doing as well. Disney is up. That's good. AI still deep in the money, taking a beating on that $60 put. The $40 put was a buy. That was a wing. But we're not losing too bad on this bid to trade. We might have some IV crush working in our favor. We've still got 51 days to go. But I expected AI to do a lot better. That's one of those that just didn't work out for me so far. ARCG has come back up, getting close to my 82. I can do a covered call on this if I want to. Let's go take a look at it. I want to be above 82. I can get $2.60. My cost basis is 82. That would be a 3% return in 51 days. Not very exciting. But hey, if we come back up, let's say if we want to make $1. Now here's one way to do it. One thing to keep in mind, if you're new to doing these, the way you calculate the percentage on a CSP is very different than a covered call, because the covered call is based on your actual stock price, the price that you got assigned the shares. I'd actually have to go figure out what my premium was. I'm going to assume it was the 82 plus a more of a discount. But what I'm trying to say is, if you do a cash secured put, you just compare it to the strike price. So it's easier. With a covered call, you have to know your underlying price. And your underlying price could be, let's say, $1, and it could be a $10 stock today if you held it for a few years, right? And so your premium, your bid, is not tied to today's price, and it's not tied to the strike price. It's tied to the price that you got it for, which is in the past. So it's very, very different. So let's just say that I got it at 82. That's going to be 1%. It's going to give me $100, and hopefully it doesn't get called away from me, because it's $9 out of the money. Let's go see what I actually got assigned for. Sorry, let's see how much a premium I got. What's my cost basis on ARC-G? ARC-G, I did a few of them. I did an 83, a 76, and an 81. The 83 got assigned to me. Why does my cost basis say 82 in my position then? Oh, because it's got the two trades. It's got the 81 and the 83 both got assigned. Therefore, it's averaging them. It's averaging them out. Excuse me. So really, my cost basis is 80. So let's see how that changes the numbers. So if I make 0.90 on 80, we're going to be above 1%. If I came and looked for $2, if I got 220 on 80, then you're at 2.7%. And that puts us at an exit price of 86, but anything above 84 will get taken away in 51 days. I'd rather be farther out. Or let's go see what happens if we go closer. We're not actually gaining any IV. The IV is higher an extra month out. But let's go look at the numbers anyway. We were looking at the 84, now we're looking at the 89. Yeah, these numbers are a lot weaker. Does anyone know why it ends in 0.21 though? Why do these end in 0.21? Anyway, I'm going to do at least one covered call. Now I'm deciding if I want to do two covered calls. And I think I can get above 95 cents on this instead of the 90. I know we're doing one right away. Let's see if that gets filled. And make sure it's in the right account. No, yeah, it's in the blue account. Boom, filled at $1. Nice. So we got $1 on a cost basis of 80. We got 1.25%. And I'll come back to that and see if I want to do another one or wait. Anyway, we got BNGO is up, not in the money. That's in my orange account. Those are covered call leaps. Those are leaps. Well, some of the new ones are not. That's where I had buying power. Hey guys, we got 6 people watching, 4 likes. Make sure you hit that like button on your way over to the live chat where you tell me where you're from and how old you are. That is today's question. I want to know how old my viewers are. We've got 8 more minutes. Right now we're in the phase where I'm mostly managing my position. If you want me to look at anything that you've got going on, let me know in the live chat while you tell me your age and location. All right, GRWG is like my Tilray plays. It's in cannabis, and it's not been doing so great, even though I think it's a fantastic company, but that's okay. I think I rolled this one forward. We've got 7 versus 4 on the trade versus bid. So we might be okay. We'll have to do the math and see if we want to close that early. I actually don't mind owning the shares though, but I want to keep rolling it for more profit. MU has been great for us. We did a $75 put, and it's been moving up away from us. We could close this early. 72 cents out of 126. 72 divided by 126. we're at 57. I think I have to invert that. We're at 43-ish% in the first week. Normally, I would close that. On any other stock, I'd probably close that. You're above 25% in the first week, you start to consider it. The closer you are to 50%, the closer you are to the double, right? If you're 30 days, this is the way I do it, guys. Okay, I'm not a financial advisor. You do it your own way. But the way I do it is if I do a 30-day put, every week is 25% of my max profit. So if the first week is double that, if I close early, I double my APR because I can take that money and reinvest it again someplace else. You guys understand that? Let me know. Give me a like and let me know in the live chat. Did what I say make sense? Why I do that? If you're in the second week, if you're above 50 to 75%, then you want to close early. You get risk off the table. You increase your APR and you move on to the next trade. Once you get to the third and fourth week, it's harder. You're just looking basically to be above 90%. But in that first week, if that first week you can get over 50% of your max profit, I almost always close it early and move on to the next play. MU though is in Micron Technology, and they were a really solid balance sheet. Let's go take a look at them on my watch list. MU, they're in the semiconductors. They were rated a 5 by me. 30% revenue quarter over quarter, 20, almost 25% in the debt ratio, but they make money every month and their earnings don't come out for another 35 days. So they passed everything with flying colors on my fundamentals, so I don't feel like I want to close that one early. I can just let that one ride. Let's open up all of them, huh? All right, we got our covered call working there. Still at the same price. BNGO, we got a $5 put. Oh, that's in my orange account, but it is a $5 put. $17 put. CLF Cleveland Mining. Okay. Clean Spark, 12.5 on the put. I might have rolled that one from a previous one, so that might not be very accurate. Disney, 165, that's doing great. Currently at 177. Did a 90-day put on that one. Went deep out, went way out, and locked in as much premium as I can before it changes. And I called it right. Geo, we've got a covered call on that one. Looks like I'm in the hole on that one. GRWG, we just talked about that. Ooh. I have to do the research on that one, see if I rolled that one. I think I did. All right, May 7th. There's my roll for $1.52 in credit when it was going to get assigned to me. I got off the May 14th. I rolled this twice. I rolled it May 7th to May 14th, then I rolled it May 14th to June 11th. So I'd have to do the math before I try and close that out. Oh. Autoplay on my YouTube took me to a non-music. All right. INO. You've been the biggest loser in my portfolio. INOD, you are doing good. Holding that one long term. Try not to do any covered calls on that. Kodak, you're the other loser in my portfolio when I tried to shotgun you in the pre-market move up. Mac has hit its max profit on the leap. I got 240 days left. Probably just close that out. Let's see, I spent $833 on it. I'm paying $130 to buy it back. And I'm pocketing the difference. 833 plus 130 puts me at 960, so I'll make about 600 bucks on that. If my math is right, could be wrong. Starting to feel a bit tired. 9:44. Hey guys, thank you guys for watching. I'm going to finish managing my positions with you guys, but as soon as I'm done with that, I'm going to sign off. Last time I'm going to tell you, okay, I do this to promote the SENS organization. They're trying to cure aging. Recommend you guys go check it out. Watch this guy's video, A Roadmap to End Aging. It's not science fiction. It's becoming science fact. Let's make it happen sooner, faster, better. And check out the Options Oracle. Yes, Matt got covered. Collect my profits on that. Check out the Options Oracle. They have a monthly newsletter, only $97 a month, but it comes with a 30-day free trial. You get one free newsletter for sure. Use that to pay for all your future newsletters, guys. It's a good deal. TheOptionsOracle.com. MNKKQ, that was actually my biggest loser. That went to 0, got delisted. MU, doing great. NBEV, that was before I knew what the heck I was doing. On the MNKKQ, that's when you do, hey, that's when you do grenades. This is what happens to you. It goes to 0 and it gets delisted, Rashid. Sorry if I'm saying your name wrong. Rashid. NBEV, I like this company. Just going to hold the shares. Poly was Plantronics, is Plantronics. I don't know why they changed their symbol. Guess it just sounds cooler. That covered call is fine. They're going up $1. My cost basis is 35. So if that gets called away from me, I'll make $1.25. Rigel has a crazy spread. I wish I could just close this out for the 5 cents and roll it again, but it's probably not going to happen. Riot, $32 put, gonna get assigned, but I collected a ton of premium, and I don't mind owning more as long as Bitcoin doesn't go to hell. By the way, these Bitcoin mining companies, I like these because I think Riot and Mara, as long as the price of Bitcoin is above 6,000, they make money while mining. We only really have to worry about these companies if Bitcoin goes below $6,000 a coin, which we're about, 800% away from or whatever. I know you do it backwards, right? Rashid, I got out of AMC. Good, I'm glad for you. We'll look for $20 range stock with good fundamentals, possible dividend upside, and wheel on this. Yeah. Let's actually, I'll for Rashid, for you. Let's see. Check out ZDGE. I'm not saying do it. Check out ZDGE and BNGO. Rashid. It is an ARA. Rashid. Okay. Check out BNGO and ZDGE. They're both under 20. And I like the fundamentals on those, so go see if you find anything on that. Quick question from Yes, I Am the Luckiest Guy. Want to sell Unity, covered call, 120 June for $1. I don't want to get assigned and get stuck with taxes. What is the probability of this getting assigned? Well, I'll tell you what this does. Yep. What's the symbol on Unity? UNTY? It's not Unity Bank Corp, right? You're talking about Unity, the software company, the 3D company, right? Yes, I am. Make sure I've got the right ticker symbol, okay? Give me the right ticker symbol, and I'll take a look at it. At 950, is it just symbol U? Okay. You were looking at the July 16th for $1.20 at the 120, and you don't want it to get assigned because then you got to pay the taxes. July 16th to 120. Well, I'll tell you, your probability of not being assigned is about 10%. I mean, it's 90%. 90% this will expire worthless when you sell that. You're pretty deep out of the money there. If you're buying the call, you'd only have a 10% chance of making money, right? So it's always the inverse, but I was just doing it so you can see and double check yourself. You're also looking at 96 versus 120, so you'd have to see, what is this, a $23 move. It's almost, I mean, it really is 23% upside. Oh, but, oh wow, they had a massive pullback. Wow. Why'd they have a massive pullback? What happened to these guys? I remember somebody telling me about this one in last year in the fall. Somebody was asking me why I don't do Unity, because 3D is going to be great. It's going to be used in housing. It's going to be used in virtual showings of properties. Is it because of the vaccine? Are they going inverted because of the vaccine? Everyone thought 3D was going to solve a bunch of problems while everyone's too afraid to go anywhere, and now it's coming back to reality. Is that what happened, or what happened to you? Why does it have such a big pullback? Rashid, you're one step ahead of me. I'm looking at wheeling it now that it's come back to a realistic price. But you said what premium? I'm always looking for 3 to 5% in my premiums. But that's a personal choice. That's me. I can't tell you what you should look for. It really depends on you. And I'm not just saying that to like be the annoying, not financial advice guy. I'm telling you, it really just depends on what you're willing to take, because it has to do with your goals. Oh, their balance sheet is awesome. I love this debt ratio on you. That is like 20%. $24. It's actually higher than I thought it was, but 24 is still good. They're still expanding aggressively. They're losing, let's call it 110-ish. It's anywhere between 83 and 144. So let's call it 110 per quarter. They've got 10 quarters. That's enough for me. I like to see above 8. That's still a green for me. Let's look at the revenue again. 40, but it doesn't tell me the yearly. 40.49. Does anybody know what last year's quarterly was for them? Yes, I am the luckiest guy. Fully aware of them. There's actually a lot more players than that. They are in the 3D and 2D game development space, although they started as a 3D company. I'm actually a game designer. Well, I was in a past life. No, I still am. I run a company that does game design, game development work. Unity is still very, very big. Unreal is the other big one that you're thinking about, but there's actually Godot engine. There's a whole bunch of other engines, but they're mostly for 2D or aren't as big. The big reason that Unity had a big run-up, though, wasn't because of video games. They're marketing themselves as the 3D solution, as the engine solution for all things virtual reality and all things 3D. They're being very good and very careful with their marketing. That's not supposed to be Uber. They're being very good and very careful with their marketing so that they get the most exposure possible. So there's all these people who think that architects are going to use Unity to make walkthroughs so that people can actually put on the virtual reality goggles and walk through the house and understand the space, which is probably going to happen as long as people use Unity. My opinion, personally, is I think Unity actually has too many bells and whistles. It's going to be too hard. And so a lot of these architects and all these other mom and pops, they're not going to go out and learn Unity or hire a Unity developer to make a walkthrough of a house. I think somebody else is going to come out with a simpler, easier platform, and Unity is just not going to capture as much of the market. But that's why there was a huge run-up in price, because when when COVID came out, people were scared of going out. So people thought, oh, everyone's going to adopt Unity. They're going to use it to do walkthrough on homes and all this other virtual reality stuff. Virtual reality dating is going to be a thing for sure. But the question is, will they actually use Unity, or will there be other smaller players in the market I think there's going to be a small player in the market that goes after real estate, a small player in the market that goes after dating, which is what Facebook is going to do. I think there's going to be a whole bunch of companies that make simpler solutions, because mom and pop shops that do like architecture and housing, they don't know anything about 3D virtual world design stuff. Unity's too hard, right? Making games is really, really hard. Unity is like, what's an example of a tool that's way better than what you need? Unity is like using a surgeon knife instead of a butcher's knife. I don't know. Like, it's just way too hard and way too technical for most people, especially for the mom and pops. But that doesn't mean it's not a good company. I'm just saying that's why there was a huge run-up. People were like super excited about it last year, and I was like, I knew it was overhyped because I actually used the software. Sorry, let's go look at Unity and go see the trade available. Let's go 23 days out. Yeah, there's not much premium here. You're looking at 1% at the 85. It doesn't look wheelable. Let's look at the 51 day just in case. At the 85, now you're getting 225. Now you're getting 2.5%. That's not much, and you're only getting a break even of 82.75 versus, well, it's 97.32. Yeah, see, this doesn't meet my criteria because you're only getting 15% downside protection for only about 2 and 3%, 2.5% premium, 15% downside protection. I want those numbers much better. I want to see 4 or 5%, at least 3%, and I want to see 20% cost basis distance. Now, there is something to be said. What is the value of cost basis distance or break-even percentage versus just being in a better company, if you actually know or actually believe it's a better company? I'll tell you what, though, the financials look good on this, right? They've got a lot of runway, cash on hand, versus what they lose every month, what they invest. Their debt ratio is only 24%. We always assumed that they could borrow up to 70% before the banks raise their eyebrows. They're growing quarter over quarter, 40%. They actually just came out a few days, weeks ago, whatever. The earnings was May 11th. So that's 15 days ago. So this is a good company. If you really just want the shares, it's okay to take a lower percentage. It's okay to take a lower percentage if you really value the company. 3.6 on 90 is 4%. But if we think about this as 3.6 on the risk, still just 4.1. I was looking at the return on capital versus return on investment. Or, I'm sorry, return on risk versus return on capital. Still just 4%. And then your 86.40 versus 97.31. You're only getting 11% downside protection if you do that for 4%. So I'd be better off with the 85. I actually do like the company though. You can squeeze at least 4 more cents out of this probably. You probably get 224. Let's see. 10, 24, 40. You know what? That's a 5 on the rating. In terms of the fundamentals, 40% revenue growth, 24% debt, 10 months on the runway. It's at least a 4, if not a 5. $2.24 on 82.76 is 2. It's so small. Oh, just wish the setup was better. And that's, oh my gosh. Sorry guys, that's 2.7 in 51 days, not even 30 days. I really like this one, but that's just too low in the premium. Yep, sorry, I won't do that one because the premium's too low. All right, guys, it's 9:58. I went over to look at one more for you guys. It's an extra 13 minutes, so I'll send you the bill. Thank you guys for sticking around. Go down to our description. I'll do the, sorry, don't leave yet. I'll give you guys 1 second here. All right, guys, here you go is the Discord invite one more time. Also, go down to the description. We have a tip box if you want to send me some PayPal money or Bitcoin money. All right. You can also sign up for theoptionsoracle.com. And if you don't have a Tastyworks account, we got a referral link to Tastyworks. Have a wonderful day. I'll have a wonderful night. Let's hope it stays green. Good luck. See you next time. Oh, by the way, one more thing. Probably no video on Friday. I'm probably going to not do videos on Fridays. We're going to switch to Monday, Wednesdays. Too many things are competing with me on Friday. All right, guys? So make sure you join the Discord chat so that you can stay involved. I will be trading on Friday probably. I just won't be dedicating my time to a video. So join the Discord chat. Okay, join it so that you can keep up with me in Discord. Thank you, guys.